Hi, my name's Alex Walker. I am the CEO of EST Resources, listed on the London Stock Exchange under the code EST. We are a Kazakhstan-focused copper and gold explorer and development company.
Copper and gold, the buzzwords of the year. Alex, good to see you again, sir. Are you in Kazakhstan at the moment?
I'm not. I'm actually chatting to you from London here, meeting with our joint venture partner, Endeavour Mining, this week.
Well, we're going to talk about that in a second. But a bit of news from them. Like just to kind of help people kind of understand what you are, what you're trying to do, and where you're trying to do it. Maybe give us that sort of top line on what the business plan is, because I think that's the interesting bit about your company.
I think, for me, there's a couple of aspects to being an explorer developer, and it's how do you diversify the risk of bringing assets into production. Firstly, what we were really enthralled by and excited by was the jurisdiction of Kazakhstan when we first came in 2019. They just changed their mineral code after decades, and they had modelled their new code on Western Australia's, which essentially made it a first-come, first-served system. And then slowly since then, they've been releasing, big tracts of land available to peg under that first-come, first-served system. There's a lot of Soviet-era data that you can collect and digitise and review to speed up and lower the cost of exploration. And so for us, this was a fantastic opportunity, and what I liken to being in Western Australia and having just about anywhere to peg in the 1970s. Truly amazing belts and completely underexplored belts that have, tier one copper porphyry deposits like Actigai has 10, 12 plus million tonnes of contained copper. In sedimentary basins, they've got Jezkazgan, which is over 22 million tonnes of contained copper at 1%. They've got orogenic gold, tier one in Vasilkovskoye, over 15 million ounces. And so, it's so rare to have a jurisdiction like this with so many different types of tier one opportunities and so underexplored. So for us, that was the big sell. And then, the first come, first served system made the jurisdiction accessible for groups like us. And the other major part is you're in what should be considered what very much is a mining friendly jurisdiction as well. Areas of the world where, mining's not a dirty word, whereas it is obviously in some places who don't appreciate or understand the industry that much. But that's the livelihood of so much of the country of Kazakhstan. And we, I was given a proud tour of the museum in Shemenayaka, for example, and showing me their mining history, which dated back to, before Captain Cook came to Australia, and, hundreds of years of production history. And so it's a wonderful place to operate from the people, from the geological prospectivity, and from, the environmental social governance and your capacity to take something from exploration through to development. So for us, it was just a wonderful place to be.
It's a wonderful place to be, but it was a big idea, and sometimes these big ideas can be too much for companies, small exploration companies. The budget's required to find projects, advance projects, and then somehow bring them into development. So we're going to talk a little bit about how you've found a kind of workaround for that. And we'll talk about some of the names involved as well, so don't be shy naming them. We're going to talk about you've got a couple of VMS projects, you've got a couple of porphyry projects, and then we've also got a deal which you're going to talk today about with Endeavour Mining, and we've also got a Chinese group that are coming in here. So they obviously want what you have found. Can you just explain this sort of journey that you've gone through to find these projects and then go out and reach partners to JV with them, if that's the right phrase?
Sure. No, it's an interesting one. I've been early to every trade in my career, Matt, and this is no different. So, coming into Kazakhstan, we picked this jurisdiction as the next major tier one, and 4 years later, we're starting to be proven right, which is fantastic. We've seen Endeavour Mining come in through us most recently, which is great. Ivanhoe have come in recently. We were part of the BHP Explore program in 2024. Rio Tinto were there. First Quantum have come in since we started Fortescue and so on. So
Let's be clear. Come into country. Not,
sorry, correct.
Yeah.
Come into country rather than all investing in
I thought
EST.
there's new news
Not
here,
yet.
folks.
Exactly. So, so the thematic was correct. We did call it, and we got it right, and we built a really fantastic operating team and an insane, unparalleled, I would argue, database of projects and prospects in country. But
right.
At the end of the day, you're also a junior company, as you pointed out. What's achievable for a small company, and so, my focus initially was, how do we get projects into production? They need to have comparatively low capital requirements. What's the capital intensity per ton of copper, first of all, but also what is the overall capex? And if you are presenting a project with a $1 or $2 billion capex, then that's quite difficult for a junior company to tackle. So that led to our VMS exploration strategy, which is essentially infrastructure-led. It's in an old VMS belt. It's 800 kilometres long. Like I said, they've been producing there. The mine nearest us is called Nikolovskoye. It was discovered in 1749. So it's been producing for hundreds of years, but is underexplored. And has railways and international airports, assay labs, smelters 70 k's away, and underfed concentrators, as well as a population both knowledgeable about mining and experienced in conducting mining and exploration. So you're not short of personnel who can assist you in your endeavours. So that was the strategy initially. Looking at that, we always understood and appreciated the potential tier one opportunity of porphyry exploration or said copper or whatever the case may be. But as I said, for a junior company to tackle these things can be quite problematic. You can spend a few $1 million per target, and then some, and not have enough to show for it, for the potential that might move into development. So for a few years, we didn't approach that strategy. We sort of left it. But then we joined forces with a chap called Chris Van Wyck, who's become our technical director, and we got into the BHP Explore program, who essentially funded that first, the highest risk work that you have to do to break down these belts. So, we used a $500,000 grant from BHP. We did a huge belt reconstruction, digitizing 1 to 200,000 scale maps of all of the structures, the geology, the mineralization points, and we took 200 porphyry prospects, more than 200 lithocaps, and we broke those down and ranked them and so on through that program. So this is the sort of work which takes a year or two, is very desktop driven, but you don't get a lot of appreciation from the stock market on. But we were able to take that work and then in 2025 apply that by sending people out to the field, visiting 2025 of those targets, and then applying for ultimately 2 licenses, 3 if you include Snowy, in fact, off the back of that. And then that helped us develop this porphyry strategy and this epithermal gold strategy, which was paid for by someone else. But even after that, even after all of that targeting work, you still have the risk reward of how to explore, for example, an 8-kilometre long advanced argillic alteration with proven gold anomalies in the system from our own assays. You still have a big work program ahead of you. You still have mag, you still have IP, and then high risk drilling and often deeper drilling. And so our thought process was we need to partner on this style work. And the first of those partnerships came with Endeavour coming in about a month ago. So we're really excited by the potential of that to help that fund that, that higher risk, earlier stage exploration for us.
Okay, like you say, it's going to potentially treacherous road because the amount of money's involved. Let's use the Endeavour as an example of how this can move the company forward. The deal I want to talk about is the recent news with the Chinese group, because I think that's an exceptional outcome for you. Should all things being equal, and should things advance to their natural conclusion. But in Endeavour Mining, they came on board initially. Why? What were they looking for?
I don't want to put words in their mouth, but Endeavour have recently announced a target that they want to discover another 10 to 15 million ounces of gold. I'd like to pretend they're all going to do that. They're going to do all of that in Kazakhstan. I'm sure that's not the case. They're still, they won Explorer of the Year award this year, and they've got, an almost unparalleled track record in that space. So they're already fantastic explorers. I think, the synergies that we see with us and Endeavour is using that, obviously their balance sheet, which is a huge thing for eStar, but also their expertise and merging that with eStar's in-country operating experience, our database, our capacity to operate very quickly and efficiently, and pick up licenses, drop licenses, conduct exploration programs, and turn things over. So it's very much our hope and intention with Endeavour that the first part of the investment is $5 million over 2 years, that will utilise that to get more than one tier one potential target. And when I say tier one, it's minimum of sort of 3 million ounces plus, which is certainly Endeavour's target, and therefore is our target for for orogenic or intrusive related gold systems or epithermal gold systems.
They'll spend some money with you. They've taken some equity as well.
That's right. That came second. So the first deal was the joint venture agreement, and so that's, like I said, $5 million over 2 years, and then $20 million over another 3 to do the maiden JORC resource, and then they'll carry us through to PFS on 1 to however many projects we managed to find that reach that hurdle. But then just last week, they announced taking an equity stake in us as well. So, for them to come in not only with you could argue that that's a risk-off investment for Endeavour. It's easy to go in and sign a joint venture and spend some money. It's obviously a big commitment from them from a market risk or public perception risk. You don't want to partner with a junior company who is the wrong partner. So they did quite serious due diligence on us, and it was a long process. So for us, that's a huge validation. But nonetheless, a joint venture is one thing. For them to come in at the equity level in eStar, certainly for me also validates us as a company and all of our other strategies. They're comfortable supporting our work, even though that's not their main goal. They're comfortable supporting our work for VMS exploration, for example, and so on. So that was a huge validation, and we're over the moon to have a FTSE 100 company as our now largest shareholder.
I always think these things are kind of it's kind of either careful what you wish for, or access to a balance sheet, which is very, very, very helpful. What do future agreements look like with them? Would they be on an asset level, presumably, not because at this moment they could take you out in a heartbeat. But what are you looking for from them, other than it's an endorsement right now? Validation of the process you've been through, validation of the management's process that they've followed to date. But going forward, what can they do for you?
It's an interesting question. Like you said, ask careful what you wish for. But it's hard to see any downside in this case for me. I've since I did my I did a Masters in Mineral Economics at the School of Mines at Curtin, and one of the deals that I wrote up, or one of the companies that I wrote a small thesis on, was Independence Group, which is now a very large Australian company, very well diversified. But the way they started was with a lot of ground in Western Australia. And one of the things they did was very, very early, they partnered with Anglo on the Greenstone Belt exploration, which ended up being the discovery of Tropicana. They had to fund at some point in time, I can't remember specifically, probably feasibility level, they had to fund to retain their 30% of Tropicana. But, that just became a defensive play for Independence Group. The value was there. They had a tier one building it. They know how to build mines. They know how to have big projects. And so all you have to do is say, right, I just need to come up with enough money to make sure I've got, in their case, 30%, in our case, 20% of an operation that's tier one, that's being built by a major that knows how to do this. And, what a fantastic problem to have as eStar, is just trying to come up with the money to build something with a partner like that. So, for me, just the opportunity to have that at some point down the road is absolutely fantastic. Strategy-wise for the company, even before signing the deal, obviously, you have to start thinking, well, how do we defend that? So how do we make sure we've got the capital to do that? And so for us to have our still independent work on the VMS, the strategy that we started with, the low capital intensity, low overall capex to production opportunities is exactly how we would intend to do that. And so, we've got this thought process that hopefully 5 years from now, we're trying to fund the development of a plus 3 million ounce gold project. Now we've signed on this deal with Vuba, with Hong Kong Xinhai Mining Services Limited, for them to take Vuba into production, where we'll retain 30%. So that's actually the problem. Hopefully,
let me sorry. You
Sure.
kind of skipped over quite an important piece there. Think very, very casually, because it's quite the deal. And maybe let's talk about this, because I want to kind of come back to sort of you're going into this with your eyes wide open. I think that's really, really important for me to feel that you know what you're getting into. It's not a case of small company, Christ, any money will do at any cost. So talk about this deal with this Chinese group, because it's I think, like I said earlier, it's kind of extraordinary in a way.
Yeah, look, I mean, we're over the moon. I hosted a few groups on site earlier on this year. For those that have been following E-Star for the last few years, they'll know that we've been talking about Vuba, our copper deposit in the east region of Kazakhstan, which is a VMS. It's 20 million tonnes at about 1.2% copper is the current JORC resource. And, we had interest in it. In 2024, we had an unsolicited bid, and at the time, the board said, well, instead of accepting this bid, and there were various reasons why we couldn't accept it straight up, we should run a process. And so for continuous disclosure, we told the market we were running this process. And what ultimately ended up happening was we didn't get bids to the value that we thought was sufficient to value the asset. And so we have since then progressed it ourselves. We've done some additional drilling. And obviously the copper market's also drastically improved, and copper's gone from whatever it was, 8,500, 9,000, and now we're almost trading at all-time highs, which certainly doesn't hurt. But we've been able to host additional groups to site. They've seen what we've seen, and now we've signed an agreement with, as I said, with Xinhai. They are a huge Chinese EPCM contractor. They've built over 500 processing plants globally. They're building one in Kazakhstan at the moment. They've got over 100 people in Kazakhstan building a significant concentrator. I think it's a plus $170 million development. And now they want additional exposure. So not unlike Endeavour, they see E-Star as, with our database, with our operating track record, as a fantastic way to get that initial exposure. And so, Vuba could be the first of more opportunities with them, but, time will tell. But in essence, what it is they will come, they'll complete the resource drill out by putting an initial 1.5 million Aussie dollars in, and then they'll do all of the feasibility work. E-Star will manage the approvals process, so we'll take the feasibility work they do and apply it for a mining license. And as well as continue to manage, the ESG aspects of the operation. We've got a fantastic relationship with the town of Vuba and the region of Shemunayka and the region and the greater East region. So we'll manage that part. But in essence, you've got people that know how to build and operate mines coming in to build and operate a mine on our behalf. And so for us, this makes it gives us E-Star the potential, assuming all goes to plan, to become a producer within 2 to 3 years without spending another cent on that project. So that's a huge outcome for us, and we're over the moon.
For producer revenue flowing. How much data did you have on that? How much new data did you create through drilling and any other kind of surface work? And because it doesn't sound like a whole bunch more drilling required for them to kind of move forward into kind of feasibility phase. Can you just remind me what
yeah, so we started with about 45,000 metres of historical data, which we digitised. We handed that over to an independent advisor. Our MO isn't to try and change data to fit an exploration target or to fit an NPV because we want a big number. I want to spend money on assets that need money spent on it because every indication is that we'll have a profitable mining operation. And so, the moment that we start receiving the data which says, no, there's no longer going to be a profitable operation here, I don't want to spend any more money on that asset. So we hand over independent data, which we collect and digitize and so on. And then we say to someone else, should we spend any more money on this? And in this instance, it was AMC Consulting out of Perth. And the answer came back with a pretty emphatic yes. So we then went on to the ground. We found 70 of the drill collars. We were able to remanipulate the maps. We did some soil sampling. We drilled an initial 6 holes. Since then, we've drilled another 5 and validated the historic data to say that we're happy with the accuracy of it, generally speaking, and that we were able to convert that to a JORC resource. And now for us, it's about filling in the blanks. Some of the drill spacing is quite high. But, your point about how much more drilling we need to do, well, it really sort of depends on what kind of operation you're building, because of being in Kazakhstan, which I believe is, and happy to back this, is the cheapest place in the world to dig a hole. You can put projects into operation faster and cheaper than just about anywhere else in the world. And so, you don't necessarily need to do 20,000 meters of drilling, define the whole resource as measured and get your significant mine life. If your payback, and I can't speak for Xinhai exactly, but if your payback is going to be 18 months, they might be happy with 3 years mine life at that equivalent of measured for their feasibility work, and then they're happy everything else being inferred and indicated for your serious payback. So, we're gonna work through that with them in consultation. But ultimately for us, if you've got 5 to 10 million tonnes and you're doing 1 million tonnes per annum, then that's perfectly acceptable to start a mining operation when you can, when you're working with people who want to dig the hole, put the ore through the plant and make money by selling material, which is, the ultimate goal of groups like this.
Yeah, look, I think what I'm trying to wrap my head around is there's a kind of maybe a different standard apply. Like when I'm dealing with North American companies, I always kind of point them towards Aussie companies because they're a different mentality to the speed at which you kind of get into production. But I imagine the Chinese would accelerate that a little bit more. So the time frame on this. So a little bit more drilling. Can you tell me how long that will take? Then a little bit more on the economic study phase. How long will that take? And what exactly do you think you're building? And therefore, so how long would that kind of EPC build out be? And what would we be talking about? What would they need to see to be able to make the decision to get in to go and build this thing?
So starting with the drilling, we'd expect to be drilling as soon as we can get on the ground next year, which would probably be May, June, with a 5,000+ meter program. Arguably, we could do that quite quickly with 2 rigs. So, within a few months, we can collect all of that data. Assays have been a bit slow in Kazakhstan, so we'll have to try and solve for that. Whether or not Xinhai bring their own assay lab to site, which they've indicated is what they might look to do. So we could have very quick assay turnaround times. And then we would be looking to start the application process for our mining license very quickly after that. So, the intention would be to have a mining license issued in 2027 and to start construction and build at that point in time. I don't know, again, I don't want to speak for Xinhai. They've certainly made indications as to how quickly all of this can happen to us. But I don't want to, try and second guess that. This is our first time operating, building a mine in Kazakhstan and also working with Xinhai. So, their track record speaks for itself, which I'm really, really excited by. But it's not unrealistic to think that we'd be in production by the end of 27, but I would say 2028 would be.
Okay. So there's a moment. Should everything go according to plan? Should they like what they see? Should the numbers stack up? There's potential revenue contribution for you in 2028, which obviously as an explorer, very, very welcome. I'm sure. So that gives me a sense of the types of deals that you're doing between Endeavour. Yeah. Okay. So between now and then, what are you relying on? Is it like are you getting management fees from Endeavour? Are you getting management fees from anyone else? Or are we going out and raising equity to kind of move things along? And if so, at what pace?
So I guess one of the questions is, what are we still in control of is probably one of those. And I think as a junior company, you can't give everything away. You still need to be in control of some assets in its entirety. So I'll talk to that in a moment. Yes, we are getting management fees from Endeavour, and a considerable amount of our team will be allocating time to that joint venture. That's part of what they're paying for is eStar's operating experience and our infrastructure. So the Endeavour fees with the budget still to be approved, but generally speaking, that will cover our Kazakhstan costs, our in-country Kazakhstan costs, with Xinhai putting in the drilling, the money for the drilling at Vuba. That covers a significant portion of the other costs that we can put in there. So, it's arguable that in 2026 we will be a cash flow neutral from an entire company perspective, a cash flow neutral exploration company, with somewhere between, let's say, $3 to $6 million being spent on exploration, completely undilutive to eStar shareholders at the corporate level in 2026, which is a fantastic outcome, for us. So that's exploration generation. I'm not expecting to have a resource out next year for Endeavour. I mean, this is the very first part. We've got generative being taken care of. We've got development being taken care of. What do we still control as a company? Well, we've got 3 porphyry and epithermal projects, which we still own 100% of. Whether or not we partner on those, I'm very open to that. And we have had some interest. And so, we might look to partner on those as well. Again, these are big assets, potentially, billion-dollar developments and the discovery of a porphyry. And so, why not partner with those early and have someone do that higher risk exploration, and we end up with a minority on that. So that's something I'm willing to entertain, and we might work towards. And then we've also got this Rulika area, which contains a Soviet deposit, just like we did with Vuba. We took that data, we digitized it, and we handed it over to an independent group. In this case, it was MSA Consulting. And recently we announced the exploration target. Once again, same as Vuba, it's an exploration target that's not spurious. It's not taking a rock chip sample and extrapolating out along a trend by 10 kilometres. This is historic drilling that's been digitized. We've done used a 0.5% copper cutoff grade, done an optimized open pit using Deswick modeling, and said, well, how much is in the pit based on historic drilling? And that's our exploration target. So that's nearly it's more than 500,000 tonnes of contained copper equivalent on the Vuba deposit. We've been given approval to drill, land access approval by the town. So that's one major hurdle out of the way. We do need to get environmental hurdles, environmental approvals in place to drill that. But that's a deposit that's sitting on a license. It's 100% owned by eStar. And then we've got the exploration upside for those areas as well. So this year, we drilled Rulika North target, which was still yet to release results on, and Televskoy, both of which look incredibly promising. There's no specific discovery there, publicly announced discovery there today. And so we need to continue to do work on that. But we're incredibly encouraged by what we've seen. And so that's work which eStar can still fund, 100% ourselves and have as some serious optionality on success. That would be fantastic.
I almost want to leave it there, because the simplicity of what I've heard is, because it's been a kind of slow burn to get to this point, right? You've had to do a lot of work, first mover, and I guess now first mover advantage in place, with big partners with big balance sheets, very, very helpful, and a portfolio which you can, I guess, control the pace at which you move without, needing to go and kind of spend a lot of money on the drill bit. So that's kind of attractive, because I think when you're at this size, it's that, that next phase of growth, because you've got to tell the growth story. You've got to have these deals set up. You can't rely on them. Stuff happens in mining. So you need to have all of these other things in your back pocket. ready to advance at a sensible pace in terms of cash burn. So interesting. So what would you say to people looking in at this thing in terms of your model versus standard exploration model, which is drill, raise capital, drill, raise capital? Why is this better?
I wouldn't throw shade on other companies by any stretch of the imagination. If you've got the right asset, have at it. Absolutely. Personally, I'm not a geologist or a mining engineer, and so I rely on a highly qualified team and a number of different opinions before making these sorts of investment decisions. What I am by training, I guess, is an economist, and so I look at risk reward, and I look at decision trees on value, and there are all kinds of things which disrupt mining and exploration opportunities, from results through to drill results through to metallurgy through to above ground risk and so on. So how does E-Star play that? Well, we're sticking to commodities which don't have big metallurgical hurdles. Generally speaking, we're in regions which are producing. We know what to look for. You can generally produce gold from a gold discovery, with a few exceptions. And so we didn't want to take that risk. We didn't want to take marketing risk of niche products, and now we're not really even taking exploration risk per se because someone else is paying for it. So for the next year or two, even that exploration risk is taken off the table for us. What I want to turn E-Star into, is a $1 billion company, and I think and I'd love to own a meaningful percentage of that, which I have today. I want to still own a meaningful percentage when we get there. And so if I can diversify our risk, have funded exploration to try and find some of these assets which will turn us into a $1 billion company, have small but meaningful cash flow to help fund that, that's the sort of thing which, yes, it might be a 5 to 10 year journey to get there, rather than the very lucky drill bit hit, total new discovery, which I'm still providing exposure to for our shareholders. But we're providing exposure to that, but we're not relying on that. And so for me, that's a fantastic approach. If I want longevity in the industry, if I want E-Star to provide those sorts of undiluted returns to shareholders, this diversified approach is the way to do it. So I'm really happy with what we've been able to do. Yes, it's taken a bit longer. Like I said at the start, I've been pretty early to most trades in my career. This is no different. But I think we are right. We're being proven right by bringing Endeavour in. We're being proven right on the jurisdiction by seeing a bunch of other, majors come into the country. Very recently, the Trump administration committed to a $900 million development check for a tungsten project in Kazakhstan, partly owned by Taucan Samruk, the sovereign wealth fund, who we're partnered with on a project as well. And so, that level of investment and foreign direct investment is coming into Kazakhstan in a big way. So we were right. And I think we'll continue to be right. So, we could be a drastically different company 6 months from today, 12 months from today, but definitely, a few years from today, it'll be really exciting.
Well, Alex, I appreciate making the time for me today whilst you're bouncing around London. You've done the hard yards. I'm intrigued to see what you get over the line next year. And as you say, it's a nice setup for the future. Appreciate your time today. Thank you.
Big 2025. Thanks very much for your time, Matt. Really appreciate it.